We are live now.
Ajit, we are live now. You can go ahead.
Yeah. So hello all. Welcome all to this live expiry day market insight. I am Ajit from Prime Research team of HDFC Securities. I am joined by my colleague Nandisha. So as usual, we are going to discuss a few things about derivatives. So hello Nandish, welcome to this webinar. So today we are going to discuss various derivative indicators like what is happening at the beginning of the day, what has changed till now, where are the important support and resistance placed as per the open interest data, what are the FIs and how what are the FIs position in the market, how are they placed, and where is the market heading. And also we'll discuss about the India VIX and its context about the market. So let's start by interacting with my colleague Nandish. Nandish, can you just explain how are the derivative plays at the beginning of the day?
Yes, Ajit. First of all, good afternoon all. Thank you for joining. 1 minute, Ajit. I am sharing my screen. Then you let me know once it's visible. Is my screen visible?
Yeah, I can see your screen. Yeah, it is visible.
Okay. Okay. So let me first share with the how the derivative were placed at the beginning of the day today. So yesterday we witnessed a minor short covering in Nifty future where we have seen 0.46% fall in open interest with Nifty rising by 0.16%. Nifty open interest put call ratio also moved up to 0.78 level from 0.64 levels. So actually this put call ratio moved up on back of put writing at 25,600 700 levels. However, FI remained seller. FI has created net short in the index future, particularly in the Nifty. You can see here they have created fresh short worth rupees 1300 crore in Nifty future, with their open interest going up by 6900 contracts. So as of yesterday, derivative data was mixed. On the one hand, we have witnessed a put writing at 25,600, 25,700, but FIs remained seller and they created fresh on the short in the Nifty future. So as of yesterday, the derivative data was showing a mixed signal. Now coming to today's data. Today you can see from here. Let me again show my screen. As you can see from here, we have witnessed short build-up in the Nifty future. As you can see, this Nifty November future added 2% OI, December future added 3%, and January future added 14% OI, with Nifty falling by 0.45%. So basically, we have witnessed short build-up in the Nifty futures today. Nifty open interest put call ratio, it came down sharply. As I discussed earlier, as of yesterday, it was 0.78. Today, at the beginning, it was 0.74 and now it has fallen again to 0.69. So put call ratio has fallen, and this fall in put call ratio is mainly on the back of call writing at 25,700, 800 levels. So as of now, data has turned bearish. As we have seen short build-up in Nifty future, and also we have seen fall in put call ratio with aggressive call writing at 25,700 to 800 levels. Over to you, Ajit.
So Nandish, yes, am I audible?
Yes, you are audible. You can go ahead.
So can you quickly explain how where is the maximum open interest in the call and put side, and how that maximum open interest will impact on the current market scenario?
Yes, so as you can see from the website, 25,700 call has the highest change in open interest, and also it consists of highest open interest 5 lakh contracts. There is change in OI, and 5 lakh 60,000 contract is the total OI. So this resistance, this 25,700 plus you can add this 26 point premium. So 25,700 to 25,725 is likely to act as a very strong resistance. That's what the data is suggesting. On the lower side, we have seen highest change in addition, change in open interest at 25,600 put. Moreover, 25,600 put consist of highest open interest also. So broadly, we are within that range. On the higher side, 25,700 to 725, and on the lower side, 25,590 to 25,600. That might act as a support. That's what the option data suggests. But as I discussed earlier, put call ratio has fallen. We have witnessed short build-up. So overall bias is towards downside. But from option data, the resistance is placed at 25,700 to 25,725, while support is placed at 25,590 to 25,600 levels.
So Nandish, I'm sharing my screen, and let me quickly explain how the technicals are placed of Nifty. Is my screen visible, Nandish?
As of now, no, but it might take few seconds. Yes, now it's visible. You can go ahead.
Yeah. So if we look at the 30-minute charts, which is the intraday time frame of the Nifty, we can continuously see that the market is below these three moving averages. So this is 50, 10, 50, 10, and 20. So whenever market goes below this moving average and sustain below it, it says that the intraday trend of the market is down, and that is exactly what we are seeing. And now it is near to this 200-day moving average. So that is quite possible that market can take support of this level, and also it is a pivot support. Today's pivot support comes to around 25,670. Exactly, market is hovering at that level. So there is possibility that market could take a breather and show a little bounce. But as you rightly said, that open interest data is also suggesting that any bounce can be used as a selling opportunity. So exactly we need to do that. Whenever the bounce comes till that pivot level of 25,730 level, we can use to build a selling opportunity, and a selling strategy can be implemented. Also, if we look at the daily chart, market is going below previous day's close. That also is a negative indication. If we look at the previous historical data, whenever market goes above previous day's high and open, it gives us a buy signal, and market generally tends to remain higher. And whenever it goes below previous day's low and close, there is high probability that market usually goes down and the correction continues. And similarly, that is what happening. We are below yesterday's close, and we are now about to break that yesterday's low. So if that happens, then further correction is also likely coming into the market. So if we consider the 5-minute chart, 15-minute chart, and hourly chart, it suggests that market is little bit oversold because RSI is now near 28 level on a hourly time frame. So generally from here, there is a high probability that market shows some bounce. But whatever bounce it will come, as we discussed with the open interest data, as Nandish also mentioned, that 25,730 level, 50 level, we can take it as a good selling opportunity. So Nandish, what is the implied volatility saying today? Can you just explain?
Yeah, so as of now, if you see the IV at the IV of the near strike price is around 7-8 on call side, while on the put side it is hovering around 10-11 side. So if we compare this IV with the historical IV, I think this has remained. I mean, historically also we have seen IV remains in this range. So that data suggests that we might not see a sharp movement on either side. But yes, as other data are suggesting, the bias remains on the downside. So any pullback rally, suppose if market rises from here to 25,700 levels, one should utilize that as buying puts. That's what the IV is suggesting. IV is suggesting that we may not see a large movement on any side, but we might be volatile within the range. Ajit?
Yes, Nandish. And if we want to look from a VIX perspective, what does it is suggesting?
So India VIX currently it is trading at 12.73. It has not moved up. It is up by 0.5%. So overall, India VIX suggests that although market is falling today, it might not see a big movement, because if you were to see compare this India VIX of last 1 year, it has remained within the range of 13-14. Currently it is placed at 12.72. So though India VIX has started rising, it is within the range of last 1 year. So India VIX is not suggesting any major downside upside. It suggests that we might remain within the range, but today's overall data suggests that we might trade with a negative bias.
Okay. So Nanish, if we consider all the rationales, so which strategy we would suggest for our viewers and traders for this expiry in the Nifty?
So, as we discussed, data suggests weakness. First, we have seen short buildup in Nifty future. Second, we have seen falling put call ratio with aggressive call lighting at 25,700 today. And as we have been seeing since last few days, FI is turned seller in index future, particularly in Nifty. They have been creating shorts in Nifty since last 3-4 days. So data suggests that overall bias should remain weak. So our advice for today is that if Nifty sees some bounce back, if Nifty comes to 25,700 to 720 odd levels, one can use that rise as an opportunity to buy puts. So our strategy for today is that if Nifty comes, if Nifty slightly moves up from here, and if it comes to around 25,700 to 725 range, one can buy put. One can buy 25,700 put, keeping a stop loss of 25750 level in cash market.
Okay, Nanish. So if you want to summarize the whole webinar, whatever we have discussed, so we have seen short build-up in the market. We have seen short build-up by FIS, and we have also seen call writing at 25,700 and 25,800 level. More than 5 lakh open inter contracts are there, and put writing is seen at 25,600. But if we compare call and put writing, call writers are more strong. That suggests, and even if we look at the intraday chart of the Nifty, that is also indicating some weaknesses is there in the market. So if we combine everything, so overall the trend of the market is bearish, and any bounce will be taken as a good selling opportunity. As you rightly mentioned that when it comes to near 25,750 or so, that level, traders can initiate buy spread or a naked put can be taken, right, Nandish?
Ajit, you have properly summarized. Any level above 25,700 to 730, one can utilize to buy puts, and those who want to take less risk can initiate bear spread strategy at those levels.
Yes, Nadesh. So we'll conclude, and we thank every viewer and traders to join our webinar, and happy trading day. Thank you, everyone.
Thank you, everyone.